Latest batch of economic figures show a slowdown in the economy, growing by just 0.2% in the March quarter, 2.3% over the past year. The governor of the RBA warning broader, wide-ranging wage increases risk adding fuel to the fire. The Treasurer responded a short time ago on this program.
I come at it a little bit differently in saying that we need to make sure we get on top of inflation so that we get on top of inflation expectations, and that's part of the point that he was making. But I think we need to be really careful here and not blame workers who've got a legitimate aspiration to earn more when they work more. We can't put all of the blame for these interest rate rises on the fact that people want to see some wages growth after a decade of stagnation.
Let's bring in Warren Hogan, economic advisor at Judo Bank. Warren, a clear difference of opinion there in terms of the impact of potential impact of wages. The Treasurer says don't blame the workers.
Yeah, and he has a point in the sense that the Fair Work Commission decision covering about 20% of the workforce won't add a lot to overall wage growth and therefore inflation pressures. But as the Governor said, it's the signalling effect to the rest of the workforce. Now, you can square this all up by the point is that I think every worker in this economy needs to be made good or somewhat good for the big increase in the cost of living over the last couple of years. But this is a one-off. These outsized wage increases of, 8% on the minimum wage is huge, but even 5 to 6% is unsustainable. They can't be ongoing. It's not the new norm. The Fair Work Commission actually highlighted that. And of course, the way that you ensure that's the case is you slow the economy and you take interest rates higher. So you can square the ledger between the two views. What the Treasurer won't say is that part and parcel of these higher wage outcomes in this year is going to be higher interest rates this year. And we might not have seen the end of the rate hikes. Hopefully there's only one more to come.
Yeah, we hope so. But the RBA governor is pretty clear. He talks about the wage issue as a risk factor, potentially significant risks. The Treasurer won't have a bar of it. And then you hear from others like Tony Burke in the government. The rhetoric is all about talking up wages. Is that sustainable, do you believe, over the next year or so?
I think it's dangerous, to be frank. I think that particularly the Employment Minister, Tony Burke's been quite vocal about these outcomes and how it's great outcomes. And you got to be clear, both the Treasurer in particular, but also the Prime Minister, that yes, we are seeing a necessary pickup in wages now, but it's not the new normal. And it is dangerous. I mean, we've seen a number of policies from the government, whether it be on industrial relations, which is now really starting to get some traction in the economy, whether it's this Fair Work Commission decision that was supported by the government, or indeed the fact that fiscal policy isn't actually doing a lot to slow the economy down, is that the government is running a lot of inflation risk. And of course, leaving it all up to the RBA just means that they're going to end up with potentially higher interest rates. Now, look, we got some hints that the economy is slowing. Hopefully that'll continue and interest rates don't have to go up much more. But if we get to a point where the economy hasn't slowed, that it's resilient and that inflation is sticky next year and interest rates go up above 5%, for example, I think that can be blamed on the government for not doing more to slow the economy with their fiscal policy, or indeed by encouraging these outsized wage increases.
Are we already on the way to a recession? First of all, you look at the prospect of a per capita recession, which looks likely in the short term, and then potentially a technical recession as well. What's your read?
Well, we've got the first leg of a per capita recession with these numbers today. Although we got overall growth of 0.2, the per capita number was down 0.3. The annual growth in per capita GDP is only at 0.3. I mean, not much has to go wrong for that annual figure to go negative. Indeed, we get another weak GDP figure for the quarter we're in now, and we'll have that per capita recession. That's I don't think the big deal. I think it is largely reflecting the fact that we've had a surge in population and a slowing economy. The bigger issue is, what does this slowdown we have to have going to look like? There's no two ways about it. The economy has to keep slowing in order to get this inflation and cost of living pressure down. It's just what extent. And I think at the moment, there's a real risk of a technical recession outright for the economy at some stage in the next 12 months, maybe towards the end of this year, early next year. But it should be mild and it should be short-lived. It'll get a lot of headlines and it will be of some concern, but we should be through it quite quickly. I think the risk, of course, is that if we try and fight that by not either raising rates enough or keeping a lid on wages or whatever is the policy that's necessary to get rid of this inflation, that you do risk having a much bigger recession down the track because interest rates have to go up by a lot more. So in a way, a mild technical recession is a much better outcome than a worse one 2 years hence. And, at the moment, I think the governor's very worried about this economy, and that's why he raised rates this week.
And when we talk about a per capita recession, it basically means, if you can just explain that to our viewers, it's in the context of a rising and fastly rising migration number.
Yeah, well, economic growth is essentially the population growth, but plus what all of us do in terms of productivity. And we're getting very sort of skinny economic growth at only 2% over the last year, and we've got about 2.3% population growth. So what it's telling us is that the economy per person is actually shrinking, which is a proxy for everyone's living standards going backwards. But I think that's quite obvious given that real wages are falling and it's tough. It is a tough environment out there. So this per capita recession, I think, is really just a reflection of a soft economy. I don't think it's something that we should be overly worried about, other than the fact that we don't want it to hang around. We want to be able to get our economy back to a position where we can grow at 2 or 3% with 1.5%, 2% population growth. Our living standards are going up, real wages are going up. And all of that requires us to get this economy back onto an even keel, as the governor says, to get rid of this inflation and allow government policies, reforms, competition to drive productivity growth. All of that is not going to be apparent in the economy over the year ahead. In fact, I think we're going to find the economy a very challenging environment the next year, but it's all in the name of getting us back onto that sustainable path and getting standards of living moving up and real wages moving up over the next 5 to 10 years.
And do you, just finally on the productivity question, are you reassured by what you're hearing from the government on that front?
Look, I'm not. The productivity measures thus far that they've announced in the last 12 months, I think, are very much at the margin. There's some good initiatives there, but they're quite minor. I think we need a much more serious look at this in terms of things like competition policy, taxation policy. And I'm just worried that the government doesn't have the political will to actually do this, and that we'll only actually see this addressed once it becomes an apparent and clear and persistent problem, which is obviously too late. So I think there more can be done, and I don't think hoping that things will return to normal or that productivity growth will improve is enough. And I think the other big issue is that the size of government is huge and it's getting bigger, and that's not necessarily pro-productivity, because I think most people would accept that the public sector is not as productive as the private sector. So I don't think the productivity agenda is at all clear and is at all convincing. And I think that's going to be something we'll see more talk about over the course of the next year as we go through some very difficult economic times.
Indeed. Economic advisor at Judo Bank, Warren Hogan. Great to chat as always.